Good day, guys. Welcome to Forex Walker. Welcome to episode 87. Today's episode is market sentiment. So let's move into the market sentiment. Before that, let's talk a little bit about interest rates and things that are happening in the New Zealand dollar and the Australian dollar, who are both correlated back to China. In other words, they're both correlated based on who their major trading partner is, who is China. China. The reason why we have the huge buildings in China, huge buildings like Shanghai, is because they've been importing a lot of iron ore from both Australia and New Zealand. So they are the Australia and New Zealand are the major exporters of iron ore to China. So that's how they correlated, and that's the reason why the currencies are correlated. And once you see one currency doing something, just understand that the other will also follow the same way of doing things. So in Jan, we had an economic report in a form of a market sentiment. Let me try and find it, that market sentiment. Wait a second. Let me show you what I'm trying to say. Market sentiment is what you see here. Uh, Let me show you. Let's look for a currency. We're looking for currency. I'm just trying to show you what I mean by market sentiment. This is the South African rand, and 13 hours ago. So what it says is important, but the parts that I love reading are a little bit down here. They say the rand had recently seen significant gains supported by domestic economic improvements, structural reforms, fiscal discipline, and favorable external conditions. What is important, the reason why we are having the South African rand pumping as much as it is doing is because of the G20 and the commitments or the promises of investment. They call them uh, commitments of investors, or however they say it, but the commitments were made and the papers were signed, and those papers on them have billions of rands promised to South Africa, based on investment and foreign companies or G20 companies coming to invest in the country. And that's the reason why it was pumping. And the first time that I made money in the South African rand was when I was in high school, and that was 2010. And we were just jumping into this trading thing, talking about it. And in school, it started in primary school, and when I got into it, it was already booming. And I just with what I've been reading, I just understood that the currency has to pump, and it started pumping in 2008 all the way to uh, 2010. And the trade was the longest trade that I ever took, but I did not understand exactly what I was doing. I just understood that South Africa is a huge tourist attraction, and once we host a World Cup, a lot of tourists are gonna be coming into the country, and probably some of them are gonna be investing money. So that was just something that we were doing in primary school, and it paid off significantly. So that's the reason why the South African rand is pumping, is the G20 and the investments. A lot of people did not understand why it was pumping, but that is what we call market sentiment. And those are the things that I'm showing to you on this system. So I took a few screenshots on the same market sentiment that I was showing to you. It comes from TradingView. So here it says, I love reading the last part. Yeah, they say pound pet losses. Again, I don't like reading these things at the top because they tell you about what is happening. But here, down here, you can get what is happening in the future. For example, the market sentiment says traders are now pricing in around 46 basis points of cuts, interest rate cuts, by the way, by year end, that is 2026, with an 84% probability of a second 25 basis points. Remember, second 25 basis points reduction in December. What that means is the pound will be selling for a long time. That's basically what market sentiment is telling us here. Let's look for something else. This is the Australian dollar. Remember, you need to check this part here. It says 21 days ago, and the other one says 22 days ago. So you need to check this today. The date, I hope you can see my mouse. The date is the 5th of Feb 2025. So I'm just trying to explain these things to you. I told you about not reading up here because they're telling you about what is happening now. I'm looking for the future. For example, they say Australian dollar edged higher to around 0.67 dollars. So on Friday, they're telling you about what is happening right now or at that time on the 21 days ago. They're telling you exactly what was happening on that day. So I'm a position trader. I look into the future. So here I'm looking. This is the future that I'm looking for. So they say markets are now pricing in a 27% chance of a quarter point rate hike at the RBA, the Reserve Bank of Australia, FAB meeting. So they're expecting it on the meeting on the what do they call them? FOMC's meetings or Reserve Bank meeting minutes. They're expecting that a 27% chance. This is a probability of an interest rate hike in Australia. Remember, Australia is. Let's go up here. I want to show you. Australia announced in January that they'll be looking into interest rate hikes. This is the 2nd of Feb 2026, and they introduced their first. Okay, they gave us 3.6% previously, and they expected 3.85%, which is a 25 basis points or 0.20 5%, and they really added it. Previously, they had this, they forecasted it, and they added it. So the RBA is actually hiking interest rates after uh, a short-term interest rate cutting cycle. I hope you can see that part over here. I'm not getting into it. So that's exactly what I'm talking about here. And they're telling us that the market is now that's 21 days ago. They're talking about exactly what I just showed you right now, that it happened. They had a 27% chance because a lot of people were doubting that in an interest rate cutting cycle we would have an interest rate hiking cycle resuming after a short term interest rate cutting cycle, because the Australian dollar did not start that long ago. So we did cut interest rates, but what is important is that with expectations rising sharply to around 76% by May, that means they will be cutting interest rates in May. So in position trading, what you do is that you look into the future, and that's why I love reading into the market sentiment. This is New Zealand dollar, and Okay, you can read up there. I want to show you the things that are important to me. Here it says, with traders implying a 57% probability of an increase in September. That is probability of increasing interest rates. These indicators boost rate hike later this year. This is what I was telling you that uh, most of the time when the Australian dollar does something, the New Zealand dollar follows. When the New Zealand dollar does something, the Australian dollar follows because these two currencies are correlated back to China. So this is just an image that showed itself. Let's get back into the take profit level trades that we took. So here we secured our trades. We took profit. This is Australian dollar and the Canadian dollar, and there's another trade that hit parity here. That is the Euro AUD. We also dropped ever since the longest time that I've been talking about this, and we hit parity. This is the weekly time frame trend line. So we did take profit. First touch, second touch, third touch manipulates. You can see that it does manipulate. So so far so good. Let's look into other trades. Here for a trader like myself, I normally take profit as soon as we get to the previous high. And as you can see, we got to the previous high, and the take profit level is not really that far. And with the current interest rate hiking cycle uh, taking part, I do expect that we'll definitely get all the way up here, but the pullback that will come out of when we get to this previous high, that pullback will be huge. So that's the reason why you really need to take profit ahead of everybody else before the shock of interest rate hiking cycle, because when it comes in, it will not be nice. It will break all the way down there and it will take off. These are the boom bust processes by George Soros, and you will see something like this as the interest rate hiking cycle continues. The USD CAD gave us a rise and it turned around from here. It collapsed all the way down there. The trade is over. The same thing in the USD CHF and the USD CAD. It They give us the same. They paint the same picture, and some people are buying the US dollar. I'm not prepared to buy the US dollar, so I'll just leave it as it is, and I was stopped out from here in profit, and I will allow the market to do what it does. For now, I'm moving out of the fourth quarter of the previous year. I'm moving into the first quarter, so I'm no longer focusing on this previous quarter. So actually, what I'm doing in this episode is showing the take profit levels of my trades. USD CAD shows the same thing. uh, this is exactly what we were talking about when the market reversed and stopped us out from here. The Euro USD is also done. The trade that we took here reversed all the way up there, stopping us stopping us in profit. And as expected, the Euro Hungarian front, proceeds to go all the way down there, and as well as the Euro ZAR, the South African rand. And let me show you why the South African rand will continue to move lower. The South African rand here, it says, I just showed it to you. The South African rand has recently seen significant gains supported by domestic economic improvement, structural fiscal discipline, and all of those things. These are the reasons why the South African rand did the same. That's the South African rand. Thank you guys. I'll see you on the next episode. Goodbye.